The private equity industry has grown tremendously in the past few decades. Assets under management have been growing at a steady rate of about 20% since 2018, according to McKinsey. The industry was a great beneficiary of the low interest rate environment following the 2008 financial crisis. Let's look at what private equity is and why it has become so popular in the recent years. Private equity raises funds from mostly private investors, such as pension funds, insurance companies, and high net worth individuals, but also sovereign wealth funds. Private equity funds acquire companies which are either publicly listed companies or a division of another company or other private companies. The deals are mostly highly levered through so-called leverage buyouts, or LBO for short, taking advantage of the leverage effect. Private equity companies try to find target companies that may be mismanaged, struggling, or may be in need of greater financing to grow. Through their expertise, private equity companies can try to add value and sell the company later in a time horizon of around 5 to 10 years at a higher price to a larger company, or by taking the company public through an IPO. Since interest rates have been rising, the deal volume has been slowing down in the private equity industry, comparing it to 2021. But in 2024, large deals have been completed or announced, which we will be taking a closer look at. On spot number 3, we have BlackRock's acquisition of General Infrastructure Partners, or short GIP. BlackRock has slowly been expanding its reach from traditional equity and bond investments into alternative investments, and acquiring Global Infrastructure Partners is a big building block of its step into alternative investments. On January 12, 2024, BlackRock announced its intent to acquire the company for around $12.5 billion. The deal will be paid for with $3 billion in cash and $12 million shares of BlackRock. It is BlackRock's largest acquisition in a long time. After the acquisition, BlackRock will have over $150 billion in alternative assets, such as LNG terminals in the US, wastewater services in France, and airports in England, and as well renewable energy projects, which BlackRock said it's a large place to grow in. Adding to BlackRock's bet on alternative asset management, it has also acquired the alternative asset data firm Preqin, enabling clients to have a broader spectrum of financial data regarding alternative investments. On spot number 2, we have Silver Lake's acquisition of Endeavor Group. Silver Lake acquired Endeavor Group for an equity value of $13 billion and a total enterprise value of over $25 billion, or around $27.50 a share. Endeavor Group is a talent and media agency which represents its clients in film, television, music, theater, digital media, and publishing. It is also the majority owner of the WWE and the UFC through its holdings in TKO Group, which will continue to be listed. The deal is expected to close in Q1 2025. Already back in 2012, Silver Lake acquired a 31.25% stake in the company for around $250 million, but has now decided to take on the entire company. In 2023, the company had $5.9 billion in revenues and net income of $357 million. The purchase price represented a 55% premium to its current price before the announcement. If the deal closes, it will be the largest private equity buyout from public to private to have been done in the media industry. Debt financing for the deal will be provided by Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Barclays, Deutsche Bank, and Royal Bank of Canada. EDT and MST Partners acted as financial advisors to Silver Lake. KKR Capital Markets acted as global financing advisors. The companies Thatcher and Bartlett LLP, Kirkland & Ellis were the legal advisors for Silver Lake. Latham and Watkins were the legal advisors for Endeavor Group. Additionally, Centerview Partners acted as independent financial advisors to the Special Committee, and Swain and Moore LLP as legal advisors to the Special Committee, which was created to represent the different interest groups of both companies and comprised by its board members. Breakup fee is $288.5 million. And for the largest deal of the year, we have Home Depot's acquisition of SRS Distribution. The acquisition cost was approximately $18.25 billion. SRS is the leading specialty trade distribution company for professional roofers, landscapers, and pool contractors. SRS is one of the leading distributors. The company emerged out of independent roofing companies that joined forces together that created SRS Distribution. It is one of the fastest growing building products distributors and has over 760 locations in 47 states. In the home improvement sector, the pro side meaning hiring specialists for building, has been the fastest growing market. Therefore, Home Depot took the opportunity to acquire SRS. Home Depot expects to expand its total addressable market by over $50 billion and will have a total addressable market of now $1 trillion. The deal still needs to be reviewed regarding antitrust laws. Home Depot will be paying the entire transaction in cash and will be issuing new debt to finance the deal. The deal was advised by J.P. Morgan and Weil, Gotshal & Managers LLP as legal advisors. The breakup fee is standing at $825 million in the case that Home Depot does not acquire the company, regardless of the reasoning, unless SRS Distribution breaches its covenant. And that was it. Those are the three largest private equity deals so far announced in 2024. Thank you everyone for watching. Like every other video, I will be doing a small giveaway through either Venmo or Cash App. Just write a comment, and for more information, read the description. I'll be giving away $7 this video. Good luck, and I hope you enjoyed the video. Please like and subscribe. Until next time.